Hey everyone, welcome to Primary Market Chatter, brought to you by Sunday Investing. This is our July 4th week episode. So what we'll be doing is, this is an interesting week where there were no IPOs for the first 2 days. Everyone was chilling. A couple of IPOs are closing tomorrow, and then bulk of action is towards the second half of the week. Friday को कुछ IPOs बंद हो रहे हैं, which are interesting. Thursday को भी एक अच्छा SME IPO बंद हो रहा है. So we'll cover all of them today. And try and just talk about what our review is. Just before we start, want to highlight Tanmay won't be joining the session. Yash won't be joining the session. So it will be Rohit and me, and then we have a very special guest. A lot of you would be knowing already. We have Sachin with us, who goes by the name MU Striker FC on Chittorgarh. Is a rather popular figure there. But yeah, very happy to have Sachin with us. He has graciously agreed to do some of the reviews as well with us. So what we'll continue to do is we'll try and have a rotating panel ताकि हम सब IPOs cover कर पाएं. But you will see more people joining as and when like we feel that the IPOs are in long supply and we don't have so many analysts. And next week would be one, right? Because next week there are so many IPOs opening. NSDL has definitely been delayed, but उसके अलावा भी काफी IPOs हैं. So very happy to have Sachin with us. Welcome Sachin on the panel for Primary Market Chatter.
Welcome to all.
Yep. With that, maybe what I'll do is before we get started, just want to highlight a couple of things. Two things that I always say. One, we are not SEBI registered research analyst, so definitely do your own due diligence. आप अपना due diligence करें, उस हिसाब से apply करें issues को. Think of it. What we say is not a qualified opinion. It is just a opinion, for the lack of a better word. So definitely do your own due diligence and उसी के हिसाब से आप अपना decision लें. Second, अगर आपने YouTube channel नहीं join किया है तो definitely go ahead and join the YouTube channel as well, the link to which is in the pinned comments. So those were the two kind of housekeeping rules that we kind of have before we start the show. With that, let me just set up today's episode. What we'll do is we'll talk about 6 companies today. 6 company की बात करेंगे. We'll start with the 4 SMEs. We'll start with TSC, then go to Swastika, then go to Monarch and Savy, and then probably do the 2 Mainboard, Indiqube and GNG. So that's the order. TSC और स्वस्तिका probably कम टाइम में करेंगे. तो उसके बाद मोनार्क में थोड़ा टाइम लगेगा, सेवी में थोड़ा टाइम लगेगा, because those are like interesting companies, or else like a decision between apply or not apply. So we'll do that, and then we'll spend time on the mainboard issues, which is Indiqube and GNG. So सबसे पहले let me set up TSC and try and do a review. Incorporated in 2003, company is a travel management company specializing in comprehensive air ticketing services for its clients. Focused on B2B and corporate sectors, TSC collaborates with airlines and travel agents to provide cost-effective travel solutions. So that's the high-level gist of TSC. इसका मैंने वो बनाया नहीं कि कितना रेज है, एक बार वो मैं आपको बता देता हूँ. So the company is raising 26 CR at a market cap of 98.3400 CR, तो 26% का डाइल्यूशन कर रही है कंपनी. इनका FY25 के फाइनेंशियल देखोगे तो अराउंड 26 करोड़ का इन्हें टॉप लाइन किया है, बॉटम लाइन किया है अराउंड 5 CR का. सो 5 CR पे ये अराउंड 100 CR पे रेस कर रहे हैं, तो अराउंड 20 के PE पे कंपनी आ रही है. और जो LM है वो एक्सपर्ट ग्लोबल है, which was a decent LM, like seems to bring a few good companies. But before I actually get started, just want to highlight, in terms of my review on this, is very straightforward. There are a lot of things which are wrong in the company, or at least blatantly present as wrong. So unless you know the insider story, unless I know the insider story, which I don't, I will be avoiding this company. But let me just go ahead and talk about it in detail in terms of what the company does. So मैंने जैसा बताया, it's a air travel कंपनी. इसके क्या है, इनके कई सारे एजेंट्स रहते हैं जिनको ये अपना पोर्टल देते हैं यूज करने के लिए, और उस पोर्टल को यूज करके एजेंट्स जो है टिकट्स करते हैं, और उसके बेसिस पे इनको कमीशन मिलता है, इंसेंटिव मिलता है, क्रेडिट कार्ड रिबेट्स मिलता है, जिसके बेसिस पे कंपनी रेवेन्यू बनाती है. जलंधर बेस्ड कंपनी है. मोस्ट ऑफ द रेवेन्यू इज कमिंग फ्रॉम पंजाब. लाइक इनका जो ट्रांजेक्शन वैल्यू होता है, मतलब बेसिकली कितने की इनने टिकट करी, तो FY25 में अराउंड 805 CR की इनने टिकट्स बुक करी अपने पोर्टल के थ्रू। बेसिकली ये डायरेक्ट नहीं है, सो इनके थ्रू एजेंट जुड़े हुए होते हैं जो टिकट बुक करते हैं। दीज आर द बैक एंड विच गिव्स देम एक्सेस। तो उसमें से जलंधर जलंधर से अराउंड 633 CR का रेवेन्यू है। So it seems that the company is extremely focused in Jalandhar. And then there is like Chandigarh also kind of comes in close with a big number of like 17, 18 CR. So just by that logic, like around Punjab kind of makes up for 80% of all revenue for this company. और अगर जैसे मैं कंपनी की हाई लेवल पे बात करूं, तो जैसा मैंने बताया 20 के पी पे आ रहा है, तो इशू एटलीस्ट हाई लेवल पे फुली प्राइस लग रहा है। बट जैसा मैं बता रहा था 805 करोड़ का रेवेन्यू है, और ये टोटल बुकिंग्स ने लास्ट ईयर में की थी 1.62 लाख, विच इज अ बिग नंबर, राइट? लाइक अराउंड 447 बुकिंग्स होती है एवरी डे की। So they booked like 450 people की ticket every day through their agents booked through the different customers, and the kind of customers they served is 3,000 which who use this portal for them. अगेन प्रेजेंट मोस्टली इन नॉर्थ इंडिया। एजेंट का इनका एक लॉगिन पेज है जिसके थ्रू एजेंट्स बुक करते हैं, और ये बेसिकली कस्टमर्स कैसे एक्वायर करते हैं, ये सेल्स होती है इनकी जो अलग अलग एजेंट्स को जाती है, उनको ऑनबोर्ड करती है कि आप हमारा सॉफ्टवेयर यूज करो। डिजिटल मार्केटिंग ईमेल कैंपेन्स करते हैं, लोग खुद से आके इनके सॉफ्टवेयर पे रजिस्टर करते हैं जिससे उनको वो मिल जाता है एजेंट्स को। सो बेसिकली इट्स अ प्लेटफॉर्म लॉग इन पोर्टल फॉर एजेंट्स एट अ वेरी स्मॉल लेवल विच इज मेजरली पंजाब बेस्ड। इन टर्म्स ऑफ द रेवेन्यू, मोस्ट ऑफ द रेवेन्यू 25 CR का, जैसे मैंने बताया इनका लास्ट ईयर का रेवेन्यू था जिसमें 5 CR का पैट था। मोस्ट ऑफ द रेवेन्यू इज कमिंग फ्रॉम एयरलाइन कमीशंस, लाइक अराउंड 4 CR ऑफ 24 इज डायरेक्ट कमीशन। उसके अलावा 8 CR इज प्रोडक्टिविटी लिंक्ड बोनस। बेसिकली कंपनी जो है वो बोनस देती है, अगर आपने 10 टिकट कर ली, 20 टिकट बेच दी एक एयरलाइन की, तो उसके बेसिस पे इनको बोनस मिलता है। उसके अलावा दे मेक लाइक 3 CR ऑन क्रेडिट कार्ड पेमेंट्स। देन ये खुद सर्विस चार्ज जो चार्ज करते हो उससे 8 CR बनता है। तो सर्विस चार्जेस बेसिकली, जैसे एयरलाइन ने टिकट बुक की 100 रुपीज की, आप उस पर 102 रुपीज ले रहे हो कि 2 रुपीज सर्विस चार्ज फॉर बुकिंग द टिकट। सो दैट फॉर्म्स लाइक 1/3 ऑफ देयर रेवेन्यू, and in total their revenue is like 24 CR because of which, and like they have some interest components etc which totally add up to 25 CR. So that's all good parts, right? Like the business is inherently decent, लोग यूज कर रहे हैं, तो it should continue because of inertia, which is all good. Now I'll kind of talk, but again I feel that using agents or middlemen in between, I don't know how penetrated is Punjab, but I feel that's a sector which doesn't excite me. Like वो over time चले जाएगा, people will just move to online, right? Like people used to earlier book train tickets as well through agents, and then that completely stopped, right? So I feel that is inherent risk for this business as well. But जो अगर मैं बात करूं, which is why I don't understand this company at all, इनकी जो वेबसाइट है, जो ये पोर्टल है, that is made in 2024। इससे पहले तो ये TSC online.in करके एक .in करके वेबसाइट है, उस पर काम चला रहे थे 2017 से, which is not opening now. So I don't understand कि इनकी वेबसाइट इतनी नहीं है। उसके अलावा जो इनके 3 डायरेक्टर हैं, उन तीनों की सैलरीज अगर आप देखोगे तो लास्ट ईयर द फर्स्ट डायरेक्टर वाज ड्रॉइंग अ सैलरी ऑफ 41 लाख रुपीज पर ईयर, लगभग विच इज अ डिसेंट अमाउंट, 3.5 lakhs a month. That is scheduled to go up to 10 lakh rupees per month from after IPO, August 2024. So उनने remuneration बढ़ा दिया है, although that is still, like from my understanding, that is the higher cap. But क्योंकि वो कैप बना हुआ है, तो that will always have like jitters कि वो कभी वो बढ़ा ना दे। तो उसके अलावा उसमें सेल्स इंसेंटिव भी है। सेल्स इंसेंटिव इज वेरी डिफरेंट। लाइक सेल्स इंसेंटिव इज कि 10% का जो भी प्रॉफिट बिफोर टैक्स होगा वो प्रमोटर्स ले सकते हैं। ये जो स्पेसिफिक प्रमोटर्स हैं, जो सेकंड प्रमोटर है, उनका भी यही है कि उनकी सैलरी पिछले साल की 11 लाख है, वो बढ़ा के बेसिक सैलरी 5 लाख रुपीज कर दिए पर मंथ। सिमिलरली सेल्स इंसेंटिव डाल दिया 10% का। Third promoter also had like 12 lakhs a month, 1 lakh rupees, that is increased to 3 lakhs. And there is a sales incentive of 10% profit before tax. So all of these things just don't give me comfort, right? Because you're bringing in private investors, public investors, yet the money is being disproportionately taken by private owners, which doesn't sit well with me. And I understand that this might just be a provision, वो होना, but like creating that provision in itself kills the company for me, right? Like 5 crore का तो कंपनी का पैट है अभी, उसमें से अगर आप 2 CR सैलरी दे देते हो और उसके बाद बोलते हो कि अब जो पैट बनेगा उसका भी 30% मैं ले लूंगा, so that just leaves you with 2 CR, right? Like, so that is the thing which I don't understand clearly between the promoters, how that is done. Because of which I am not a big fan, but just want to highlight there are a few good names in pre-IPO who have done the pre-IPO. The income list is decent for what I was expecting. It is better in terms of what the company will do. जो भी 25 CR का raise है, all of it will go to working capital. So that's a straightforward list. But income list decent है, LM quality decent है, pre-IPO names decent है. So I feel there is something with respect to which I can't see, which doesn't meet the eye. Maybe something with respect to इनकी ना दो एक सब्सिडरी कंपनी है जो अभी मर्ज हुई है, जिसके ने फाइनेंशियल्स मैंने देखे नहीं, बट something to do with that. Maybe TSC Infra Private Limited, which is their subsidiary company. Maybe something that, but I will not take a punt on this because of primarily two things. There are a lot of issues. A, so better companies, and B, I don't know what the story is. So if there is a story, it might do well. Unless there's no story, it's coming at 20 PE with so many conditions which I don't understand, so I'll be skipping the shoe. So that is with respect to the first company which we spoke about, which is TSC India Limited. Anything which Rohit and Sachin you guys have to add, or we can quickly move forward to the next issue? Let me just see if there are any comments. I've been speaking on and on.
Nothing from my end. Nothing.
Nothing, man. I
Perfect.
think for people who track the names in the pre-IPO are associated with folks who tend to move the price, or what's the right word? When people see those names, they automatically assume that the stock is going to get cornered. So people who are keen on that sort of thing can just look at the pre-IPO holders and then take a call whether they want to trade this stock.
Yeah, I think I was looking at it, but it's just that I don't know the story at all, right? And there's no interview available as well. So it's just very, like, it just feels that they don't, like, nobody wants this company to be discovered for this space, for lack of a better word. So if it is the case, then I would let it be. Primarily because the issues are not in short supply, right? So don't have just this company to look at.
And one thing to add, that if SmartWorks was questioned for that IPO thing, that the IPO will be brought and the management will get the incentive, why shouldn't this be questioned?
Correct, for sure.
I don't think traders really care about all that. I think they're going to look at whether they get 15-20% very quickly post listing, because the stock will be run as opposed to anything in the fundamentals.
Yep. Let's see. With that, maybe what we'll do is we'll move forward and talk about the second company. The second company we'll talk about is Swastika Castal Limited. Just setting up the company again, incorporated in 1996. Company is engaged in the business of aluminum casting. The company operates primarily in the manufacturing sector, focusing on producing high quality aluminum castings through processes such as sand, gravity and centrifugal casting. So ये second SME IPO जो हम बात करने वाले हैं, उसका नाम है, ये अपना छोटी सी कंपनी है विद द नेम, Swastika Castle. So with that, maybe just setting up the IPO details. It's a 14 CR IPO at a market cap of 53 CR. इनका पैट जो देखोगे आप, तो लास्ट ईयर का पैट अराउंड 2.63 है. So they are coming at like 20 PE. And the LM for the company is Horizon. So with that, maybe I will hand it over to Sachin to talk about Swastika. Over to you, Sachin.
Thank you, Manishji. So Swastika Castle is an aluminium casting manufacturer, basically out of Gujarat, Vadodara to be precise. They offer equipments for textiles, firefighting equipment, automotive, railways, etc. Currently operating in around 100,000 square feet facility. Majorly employing contractual employees. The employees on payroll are very less. And in the same regard, the main man behind the business, Mr. Varun Sharda, is actually taking around 30% of the salary, around 18 lakhs or some 20 lakhs per salary, and the total remuneration for the whole employees is around 1.5 cr. So that is one thing to note. So about the capacities, they have mentioned that they are utilizing around 50% of all the capacities, and slowly for the funds that they are trying to get from the IPO, they are trying to maybe increase this capacity to a certain level, and for the rest of the part that will address the bottlenecks. That is, they current have the capacity that they currently have doesn't include the helium testing equipments that they require, the CNC machines and so. So they used to outsource them before, and now they are trying to make them in-house. Behind the history of the promoter, Mr. Varun Sharda, he has good experience, and someone along with him, Indra Sharda, she is a chartered accountant, 5 years of experience. The clients include Siemens, Hitachi, Toshiba, some others as well. 35% exports, 65% domestic business, exports likely having some good margins on that front. So in the IPO meet, he tried to mention that the China +1 policy is actually benefiting India and Swastika as well. I don't know the scale for Swastika currently, but he did mention that. Coming on to the financials, they reported around 24 CR in revenues in FY23, then about flat in FY24, and a slight increase about 30% in FY25. The major reason for that flat revenue was they mentioned that aluminium prices fluctuated a lot, so they couldn't manage it well, and that led to the flat revenues in FY24. Though they have mentioned that they are targeting around 20-25% in FY26 as well. And now when the IPO proceeds are fully utilized, they will probably target 40% or more in FY27 and going ahead. Current order book status is around 18 CR, and with they mentioned that they have long-standing relationships with the clients, especially in the export market, Spain, Poland, Vietnam, etc. Everything. Now for the growth projections, I have already told. For the competitive landscape, they have shown Thai casting as their peer. I don't know why, because Thai is primarily in automotive, whereas Swastika is probably around 10-20% in automotive as well. They mentioned that there was no listed pair in their segment, so they mentioned Thai as well. Don't know the rationale for it. They mentioned that some unlisted players are there. All of this is mentioned in the IPO meet. So some unlisted players are there, and some international clients are also there that they compete with. But since Swastika is at a relatively lower scale than those, so they don't face much challenges. There are some related party transactions, which they mentioned that was primarily for the CNC and outsourcing machine that they are now trying to do in-house. So now for the valuation part, it's coming at around 15 times. If we go by the IPO year margins, which is primarily due to the reduced salaries of the other employees other than Mr. Varun Sharda. So Varun Sharda is taking his share exactly as he was in the previous year, slightly reduced. But the other employees are now on so they are on contractual basis, so their salaries are quite reduced, and that is primarily led to profit increase. Thai is near 2025. Thai casting has also received a fundraise in recent times. So, and they have better client than Swastika Castal at the moment. So, and so this is regarding the valuations. It could have been priced a bit lower, I think. And to remind that this is a fixed price issue, so there will be no anchors and all. LM is what? LM is 1 minute. LM is Horizon, yes, as Manish ji mentioned. So Horizon has a in and out experience, so it works sometimes, it doesn't work sometimes. So take your call basis that.
Thanks, Sachin. Thanks for highlighting. Just want to highlight, it's a 20p, right? FY25 में, like 2.5 का PAT है और 53 का revenue, right? So basis that 20p, right? And the margin has went up primarily
Yes.
in IPO, yes.
Yes, I mentioned 15 for the FY26 for what they're projecting.
Got it.
On
Got it.
TTM there are 20. Yes.
Got it, got it. Understood. So basically forward में 15 पे आ रही है approximately. But इतनी छोटी कंपनी I feel it can work primarily because of just the small size. But having said that, it's a fixed price issue. I would be avoiding this issue simply because too many companies to compete with. There is Savy Infra we can talk about, and then there's Monarch, which is ending on 24th. With that, maybe we can move forward to the next company. It's a very smallish company. Again, if you know something which doesn't seem meet the eye, then one can take a call. But at least on high level, the company looks very straightforward and doesn't seem exciting to me. With that, maybe let me move forward and talk about the third company. The third company we'll be talking about is Monarch Surveyors. Setting up the company, incorporated in 1992, company is a civil engineering consultancy firm. It offers comprehensive services spanning topography surveys, project management consultancy, design and engineering, geotechnical investigations, land acquisition, GIS mapping, and feasibility studies. Setting up the IPO, it's a big size IPO, 94 crores का IPO है, सब fresh issue है. Company जो market cap पे आ रही है, it's coming at 354 crores of market cap. So 354 पे around 94 का dilution है, 29%. FY25 के रेवेन्यू की बात करूं तो रेवेन्यू वाज 156 करोड़ और पैट बात करूं तो द पैट इज 35 CR. So very healthy PAT margins, like close to 20 to 23% की PAT margins है company, but which is expected of a consultancy company because they tend to operate with the operating leverage. And अगर PE की बात करूं तो PE 10 PE पे आ रही है, which seems optically pretty low, but we'll have to see कि growth कैसे आएगी वगैरह. In terms of the LM is also Beeline, which enjoys a good repute. With that, over to you, Rohit, to talk about Monarch Surveyors, because I've heard a few things and everyone's interested to figure out about Monarch.
Sure. Just highlight is I have studied this company in like 25 minutes. So I'll try and explain whatever I've learned, but do please go and see. I've listened to one interview. If there are more interviews online, please do search, find them out and make your own view. So Monarch Surveyors, this is a 95 crore raise. So good. It's a nice large SME with obviously 35 crore PAT, which justifies the size of the raise. They are a consultancy firm. So they do what they call concept to commissioning for infra projects. So this is from start to finish to determine the project. So they obviously won't get into the execution of the project, but they'll help create the reports that the companies that actually need to execute the project, or if the government wants to give a project out for tendering, they are the ones who will do the detailed project report or DPR. It usually starts from survey. There'll be a design element. There will be a land acquisition element, for example. There'll be an element of just saying, okay, how do you actually, if this is an expressway, if this is a highway, do you have a 2-lane? Do you have a 4-lane? Do you have a 6-lane? So everything that goes into determining what that project will be, how much it will likely cost before the thing actually goes out for tendering. And they do this for primarily roads, a little bit in railways, but they have the capabilities to do this, and they've done some projects across, even metros, town planning, water, like dams, transmission lines. So across everything from in this infra segment. Their focus though is roads and railways. So what they do is, so let's say the government wants to set up an expressway. So it would start by, say, surveying the land to map that terrain. What is the altitude, elevation, what are the bumps, what does that geospatial this thing look like? Then they would create those feasibility studies. They would manage approvals. During the construction, they would probably monitor the progress, provide quality checks, make sure that it is going as per the standards and timelines. So they are ensuring everything except the actual execution. They are the ones who are responsible. And one of the things that they do, which is what I think is a little bit of a differentiator, is that they use very, very up-to-date surveying equipment and techniques. So they do high definition 3D laser scanning. They use different types of GPS. There's some technical terms, but different kinds of, say, GPS to actually map the surroundings and locations. They use a lot of radar, LiDAR, drones. So there's a lot of different things. And those are just the, I'd say, technical terms. And each of these terms or each of these processes, have their own technology that is continuously getting updated, that these guys have to be on top of. But all of these that are what they claim are their differentiators. They're always ahead of the curve when it comes to the equipment and tools with which they do the work and do their consultancy. Today, about 60% of what they do is this DPR for roads, 15% is for railways, and the rest is all these small other categories. I feel in that other categories where their long-term value in this company is as they scale some of those other categories. Today, 85% of their business comes just from Maharashtra, which is in a way a risk, but for them, they look at it as an opportunity. They've sort of proven the model in Maharashtra and they want to take this, to all the other states where they have small presence. Today, they have about a 500 crore order book, of which 150 crore is executed and 350 crore is pending to be done in 2.5 years. They bid for about 10, 12 projects every month and win 2 or 3. So you can, and their projects are typically 7-10 crore on average. They have a few big ones. You win an expressway, you might win a 70-80 crore project, but generally their average project is 7 to 10 crore. So you can say that they'll be constantly winning maybe 150 to 200 crore every year. And as they scale, they will hopefully keep bidding more. And some of the working capital that they're raising is to help with that. Now, they have a lot of equipment in-house, which also reflects in their balance sheet. So for a consulting company, they have almost 40 odd crore of just, equipment in their balance sheet, which is a good thing. And in their view, it is a reason for their margin and their efficiency because they have the best equipment. They're also, in fact, one of the biggest aspect of their fundraise, I think 32 odd crore is just to get even more, fancy equipment. You can have a look, just Google some of these Jedo trolleys and the Trimble, the equipment that they say, and you'll get an idea of what is the sort of thing that these guys do. So obviously there is a core tailwind, which is the infra push from the government. But I think there is also a general digitization of our infra. There's this digital twin project that the government is looking to undertake. There's a lot of geospatial mapping that is happening in the country. There are some estimates thrown out of how India wants to spend 1 lakh crore over the next 5 years. I'm forgetting the number now, but over the next X number of years to digitize a lot of this infra and map a lot of our infra and our land. And that is the core tailwind that these guys should be capitalizing on. They're very good clients. Obviously, they work with the central and state governments, but they also have a lot of private clients like L&T, Adani, Godrej, etc., who they help with on the private side when they want to bid for some of the projects that a government will tender that the government put out. They will help an Adani on how much and how exactly to bid. At the end of the day, this is a consulting business, so it will always have good margins. It's a people-centric business, which means you have to hire good quality people. So that is generally the limitation to scaling a consulting business, because you're not just hiring labor, you're actually hiring skilled manpower, and how fast you can hire skilled manpower will determine how fast you can grow. Today, if you see in their employees, out of 500 employees, almost 170 are engineers. And they have a similar number of surveyors and some 70, 80 project supervisors. So you will have a higher skill for a business like this, which is obviously the thing that also gives you margins, but it caps the speed with which you can grow a little bit. Their numbers are very good. 155 crore last year. There's FY25 with a 35 crore PAT. That's like a 22% PAT margin, which is amazing. They didn't grow a lot from 24 to 25. I'm not sure exactly why that is, but as per their receivables, they are looking to do almost 60% growth for this year. This is not validated. I don't know if in some interview they have said this number or given any different guidance, but as per receivables, they're saying they'll do 250 crore in FY26. There is a bump in receivables in FY25. Almost it's gone from 10 crore to 40 crore, despite revenue not really changing much. But that in the RHP is because there was a lot of billing in the end of March. I think they would have also wanted to make sure that the March numbers look good. And a lot of that money has been received. Some of these slightly lumpy businesses, it can happen. It maybe this would have been due in April and they would have made sure it got billed in March just so the revenue does not look off for the IPO year. But their claim is that the money for all of this has been received. The cash flows though have been maintained. They're very good. You'd again expect that from a consulting business. This company is coming at just 10x, which is extremely cheap. in terms of peers, now there's two types of peers. There's one company called Dhruv Consultancy, which looks like a very, very similar peer to me, very similar company. Maybe Monarch has slightly better equipment and capabilities around this geospatial and mapping and stuff like that. Dhruv trades at, but otherwise Dhruv is very similar. They also work mainly in infra and roads. It trades at 18 on, I think 19 times. There's this company called Sainsys Tech, which is more of an IP-led business in geospatial. They have their own platforms and IP. So I would say, and that trades at like 40x. So that's a much more, the capabilities of that business are very different and at a different league. That trades at 40x, if I'm not mistaken. This company is closer to Dhruv. But the one thing here is there are a lot of fairly obscure nanocaps in this kind of infra consultancy space that trade at like 7 to 10 PE also. I have no idea about those companies. For what reason, these are like 40 crore, 50 crore kind of market cap companies. There is this Mangalam Infra also that came last year that came with a lot of hype, listed at 90%, whatever, 100, some crazy number. I think the price was once at 110 and today it has fallen to 20 and the numbers have been horrible. So this consulting space, you've got to be sure that the company that you have picked is a high quality company with good management, with good plans. I feel Monarch is actually very good. What little bit I could see, I got a lot of comfort from the promoter and from their balance sheet and the equipment that they have and the way they operate. It doesn't look like the obscure companies or this Mangalam. It looks closer to a Dhruv, or in some cases, some of the things that they compete with, I understand they actually compete with the Sainsys Tech. So obviously this is not a business like that, but I think this is a high quality company. 10 P for a high quality company, whatever it is cheap. Where it will list, I'm not sure, but I think somewhere between 18 to 20x is okay. I don't see it moving a lot after that, but I think an 18, 20x in line with Dhruv is a kind of safe expectation. I don't even know why this company has come at 10x. But I think it gives a lot of opportunity for people who get lucky, and get an allotment to make good money, on listing. One interesting name in anchor was Morgan Stanley. Of course, bunch of other not bad anchors, decent anchors, but Morgan Stanley in the anchor book directly. So generally when you have some of these global FIIs, you will not see Morgan Stanley, but you'll see Morgan Stanley something ODI. That ODI means that somebody else, there's some unknown person who's using Morgan Stanley, some foreign, maybe an Indian, some NRI, whatever, who's using Morgan Stanley as the vehicle to invest in the anchor. In this case, it is Morgan Stanley itself, which is an interesting thing. At least that's my understanding, because that ODI or P note or whatever, that is not mentioned in the anchor name. If it is actually Morgan Stanley, that's a very interesting development for the SME ecosystem to have somebody like them as an anchor. So overall, I'm positive it is Beeline. Beeline will obviously has generally done a very good job of protecting the price. There is a very healthy GMP also. We can apply and it will subscribe 200x probably in most of the categories. So you can hope that you will get an allotment. If you do, if there's every chance this will list 60-70% up.
Thanks, Rohit. Thanks for the comprehensive review. If you read it in 25 minutes, I've been reading about my companies for the last 2 hours and still haven't done that decent a job. So kudos. But yeah, I feel it's good that it's coming at 10p. 10p seems low for a consultancy business with a healthy PAT margin. Again, not comparing with, let's say, something like a Gem Enviro, but when Gem Enviro also came in, it had a very healthy PAT margin and the share ran, at least in the short term. So I feel here also the share would do well in the short term. Don't know where it will list, but probably hoping for a 50-60% or something about that. So I'll be applying to this issue. It's on 24th. So what we need to keep in mind is 23rd is when Swastika and Savy are closing. 24th is when Gem is, Gem, my bad. Monarch is closing. And then 25th is when GNG and Indiqube is closing. So we'll have to utilize the funds well to be able to manage the concurrent issues. So definitely do that. But yeah, this seems like a slam dunk apply, at least at the IPO price, and then we'll see. With that, maybe we have covered mostly on Monarch. Just Sachin, if you have anything to add on Monarch, which you felt we didn't cover.
Just on the tech part, the tech that get redundant over time, which they need to continuously replace, and the advanced tech that is coming in, that could replace the manpower a bit. So that's one thing maybe for the future to keep an eye on, but that is one thing to note.
So you're saying that's a risk on the business because the business would not need so many people, but then it's good, right? They'll still need consultancy companies to be able to certify everything, right? The
Yep.
DPS, etc. So the margins would further increase if that happens, correct?
Yep. And one thing that they mentioned some time back that regarding Drove consultancy, they mentioned that Drove operates in couple of segments, be it roads or infrastructure. Whereas this Monarch, it operates across segments. It's roads and bunch of other segments across almost 5 to 6 segments more. So that's definitely an advantage for Monarch.
Got it. Perfect. Thanks. Thanks, Sachin. With that, maybe just want to highlight that Sachin is also very famous on Chittorgarh. So if you haven't followed him, please go ahead and follow him while we kind of move forward to the next company. Also, if you are not following the YouTube channel by any chance, go ahead and follow the YouTube channel as well. ऊपर पिन में comment में है YouTube channel का link. वहाँ पे I will put in the space as well. We'll record it and put it. So with that, maybe what we'll do is we'll move forward to the fourth SMA before we talk about main boards. Two main boards, and we are running short on time. So let me just quickly wrap it up. Savy Infra, incorporated in 2006, company is a EPC company specializing in earthwork and foundation preparation for infra projects, including roads, construction, embankments, etc. The company also operates an asset-light business model, offering specialized services by renting trucks and drivers and managing the execution of transportation. So, दो सेक्टर्स ऐसे हैं जो बहुत ज्यादा जिनको पी नहीं मिलता है. The company is kind of combination of both of them. It works in infrastructure, infra, and then logistics. So it's a combination of both of those sectors, and that kind of makes it a very unique play where you know that the P multiple would rather be low. But in terms of the IPO, it's a 70 crore IPO. 70 crores ka IPO, so big size IPO at a market cap of 250 crores. 250 crores pe company 70 dilute कर रही है. So around 28% again, yeah, similar ranges where what the company is diluting. FY25 financials की बात करूँ तो company has done a PAT of 24 CR, revenue 284 crores किया है, PAT 24 crores किया है. So they are coming at again cheap, right? 10.2 type का PE है company का जिस पे ये आ रही है. But it's a proper infra EPC logistics and logistics also like asset heavy logistics, not asset light logistics per se. So be wary of that when you are giving a PE to this company. But yeah, that is what at least my read was. In terms of the LM is Unistone. So with that, over to you, Sachin, to talk about Savy Infra.
Am I audible?
Yep.
All right. So Savvy Infra is primarily into EPC and logistics. 85% of the revenues are coming from EPC and the rest from logistics. Operating primarily in Gujarat and in and around Maharashtra, Odisha, Andhra as well. Client list includes Dilip Buildcon, KEC, Wellspun. Wellspun is a new one that is coming with the EV truck thing. I'll explain that later. It was primarily business under the Kotharis previously, and then it was taken over around 2020 by this Mundra family, Tilak Mundra. Tilak Mundra, though on the education side, he doesn't have much experience, but being in the business and managing a different type of family business, he's probably gains experience in this segment as well. So EPC is 85% of the revenues. They do primarily excavation. 60% or so is the excavation part. The rest is maybe doing construction work, roads, canals, and basic civil work. That takes probably around 8 to 9 months to do. They operate under asset light, so they lease machinery and then they perform their works. The logistics segment, 15% of the revenues, they are tied up with Mahajanko in Maharashtra for that fly ash and iron core thing. So they used to transport it and also transport excavated materials. Now they have mentioned that earlier they used to transfer the diesel vehicles. Now they are trying to enter into the EV vehicles. They mentioned that they are in probably a first mover advantage in this, though not entirely, because AVG is also doing something similar that was mentioned quite a while ago. Now, why they are doing is because they say that the transition to EV vehicles will probably get higher margins around that is received in diesel vehicles. They already have received around 12 EV trucks orders, 38-ton capacity from Welspun, and they are trying to deploy more than 500 trucks going ahead. Now, coming to the financials, since they took over the Kothari business, so in FY23 it was probably around 6 CR of revenues, and then it jumped up to 100 CR in FY24, and now it's 280 CR in FY25. They have said that they're trying to maintain around 70 to 80% growth for FY26 as well. And due to the EV logistics part, they are trying to project the net margins going ahead in FY26 around 9 to 10%. Coming to the order book, it's around 400 crores, 430 crores to be precise. And they are trying to say that they will execute everything, possibly everything in FY26 as well to match that growth outlook. Receivables thing is a pertinent issue in EPC, be it any EPC. So that is one thing to note. There are some short-term borrowings that are quite high interest, around 18 to 25%, given by the directors sometimes, the unsecured loans. So that is one thing to note. Now for the valuation part, it's around 10 to 11 times in trailing basis. They've shown AVP as a peer, that is around 14-15 times, I think. And Ganesh Infra World. Ganesh Infra World doesn't fit a better peer because now Ganesh is primarily a subcontractor, and now they are slowly venturing into primary contracting, but for now they are subcontractor. And Ganesh is also diversifying into water projects, unlike this Savy Infra. The IPO is around 70 CR, 49 CR is going for working capital purposes, and for the rest they have literally said that 21 CR will be for GCP. Now they haven't mentioned that they will use this GCP only for the EV trucks, but it's assumed it will be used. They diluted around 2 to 2.5% in around I think in July 24. That was around 89 CR market cap. Now the current market cap they are coming at 250 CR. So there is a more than likely dilution from the promoters at this current point. So and the post IPO promoter holding is around 62%. Going forward, they are targeting to increase this EV logistics business, and they are targeting not to take these EV trucks on the balance sheet. So they are targeting to lease them from the NBFCs, use them from for the transporting part, and then keep their balance sheet asset light as previously. Now they are trying to bid for larger orders as well in and around Gujarat, and probably diversifying in other locations as well. They mentioned that the receivables and cash flow issues visible in the FY25 financials are largely under recovery in the 2 to 3 months that have passed in FY26. Now the LM here is Unistone. So again, like Swastika Castal, it's a hit and miss. So be wary of that. Negatives I have already told, that promoter concern regarding his that the experience they have is okay, but they have tried to occupy a already existing business, change its name, change its objectives, and then continue the current business in the already existing business, just to show that the already existing business had some history going back. Coming to the anchors, I saw some good names in the anchors. Chhattisgarh Investments is there. Some overseas fund of Ovata Equity Strategies Master Fund is there. Ibisu Global Growth Fund is there, which I saw was holding probably Balu Forge and Raymond Realty in their names, shareholding names. So that is one thing to note. Rest all looks decent. Arth is there. So that is one thing to note. So considering all this, it's and GMP is there as well for this issue. So must apply for my side. Thank you.
Got it. So again, just to clarify, ये इसका peer कौन होगा? AVP peer होगा? Like, do you think right peer is AVP?
Yes, AVP can be a peer and some unlisted ones as well that do the excavation part. So he mentioned that Mr. Mundra that unlisted ones are there, but we primarily compete with AVP only.
But ABP has shown very strong growth after coming in, right? Like when it had came in, I know it had came in cheap and didn't also get a great PE as well, right? Versus this guy, like Savvy has a slightly very track record, right? Where they have picked up a company and then try to like build business on top of that just to show it's a old company. Not just to show, but like that is what has happened, right? So PE
Yeah.
उससे थोड़ा comparatively कम ही मिलना चाहिए, right? So the
Yeah.
margin is
Plus,
like
yes, Manish.
so the margin of like the gap is rather low, right? It's coming at 10.5, AVP is at 13. So there's a 20% type का कुछ दिखता है बीच में, right? Not more, if I'm not wrong.
Plus AVP is diversified as well, right? So it's in solar and other segments as well. And but this one is in the logistics and infrastructure. So AVP always will get some better multiples.
Got it. It's just that the sector in itself doesn't get that high a multiple. I would be applying to this company honestly, but I'll be applying only with the intention of hoping that it gets a slightly lower subscription and I can flip on day one. I don't think this will list negative. There will be enough demand. तो उसकी वजह से इसको apply कर सकते हैं. I would be applying, but yeah, that is what my view is on this company. Rohit, do you have anything to add on Savvy or we can move on? In the interest of time, we're already 50 minutes.
Nothing much, man. Like this is the most entry level EPC possible, which is like this ground excavation. On top of that, it's logistics. Both are 10 PE sectors. This company should get 5 PE in my view, but whatever, there is some interest. I don't.
So you're
I
saying
don't.
10 into 10 becomes 5.
I think that Unistone is tried to make AVP appear because of the growth only.
Yeah, that's
That's
good. At least I'm glad he's trying to grow 70%. So earnings growth to hoga hi. So it'll trade at 2.5 times forward, knowing the market. But yeah, I'm not very excited about this.
Will you be applying?
Mostly not. I think there are enough main boards clashing.
Should have told me, man. I applied today.
Oh.
Oh no, but there are no main boards clashing, right? Like, see,
This is on what?
whatever
Savvy's
you
which day? Sorry, Savvy's on Friday.
finish
Which tomorrow?
tomorrow, so you can
Oh,
use money on
tomorrow.
25th,
Okay, okay.
right? That's why I'd apply. 23rd gets repurposed on
Right.
25th.
Sorry, I thought this was on
So,
Friday. Then maybe I will. I'll see. I don't know. Probably not actually.
oh, you still won't apply? I'll make you apply. There's nothing to do there. Right? Like, it won't list much higher, but what's there to lose?
True.
Yeah. Decent anchors also. Anchor book issue, book build issue. Definitely IPO price will be protected, I feel. So can definitely apply is what I feel. But yeah, long term also I think the company will continue to grow at the pace of its earnings EPS growth. Sector I don't think will get a good bump as such. With that, maybe we'll kind of close all the SME companies. Moving forward to the mainboard companies, I wanted to do Indiqube first, but let me just try and finish up GNG and then we can come to Indiqube very quickly because I'm bored of doing co-working companies every week. We did SmartWorks yesterday, last week, and now we have to do Indiqube. But yeah, before we move to that, let me just set up GNG Electronics and let Rohit talk about GNG. Incorporated in 2006, the company offers refurbishing services for laptops, desktops, and ICT devices both globally and in India. The company operates under the brand Electronics Bazaar, offering sourcing to refurbishment to sales to after-sales services and providing warranty. IPO की बात करूँ तो it's a very small size IPO, 460 crore IPO for a main board, out of which 400 crores fresh है, 60 crores का OFS है, 400 crores is going into growth capital, 60 crores is going into OFS where the promoter is taking a part exit. Company is coming at a market cap of 2700 crores, 2700 crore पे 460 crore का dilution है, around slightly less than 20%. FY25 के financials की बात करूँ तो PAT 70 crores है, revenue 1420 crores है. So market cap to sales is around 2 के market cap to sales पे आ रही है और अगर PE की बात करूँ तो around 35 PE पे आ रही है कंपनी. LM की बात करूँ तो LM मोतीलाल ओसवाल है, IIFL है, JM Financial है. So 3 LM है for a rather small size issue and the anchor book also look pretty decent. With that, over to you, Rohit, to talk about GNG Electronics or Electronics Bazaar.
Sure, Manish. And one of the reasons I had only 25 minutes for Monarch was because I had to find 20 minutes to read this also. So this is not going to be I've not been very thorough on the RHP, but I have a lot of history in this segment. I used to run a startup that did refurbishment of electronics, among other things. So I understand the space. So I'll share a perspective that is a little different maybe from what is in the RHP. And I've noted down 2-3 points. So I'll definitely mention those also from data specifically for this company. So Manish has given that initial intro. They are in the business of refurbishment. Of course, refurbishment is one part. You basically source, say these end of life, or not necessarily end of life. Some of these have much longer life, but these end of use, at least, electronics, you refurbish it and then you distribute it. You sell and distribute it. They do this primarily B2B. They have tried a little bit of B2C, I believe, but they're primarily a B2B business, because it is just a lot easier. And I'll come to that later. Their main focus is in laptops. About 75% of their business is just laptops alone. And again, I'll come to that and I'll come to why, from a fundamental business perspective, why laptops. Apart from this, they also do a few interesting things. They do buybacks, which I'll mention about later. They work as an ITAD, which is an asset disposal partner with a lot of corporates. Again, I'll mention that also when I just tell you structurally why this is an interesting segment and interesting business. And they've tried a little bit of B2C through their own website, Electronics Bazaar, as well as I think on Amazon and stuff, but that didn't work for them, which also I think is a good thing. And they're kind of leaving that and focusing just on B2B. Now, what matters for a refurbishment business? There are roughly 4 things that need to be solved for a refurbishment business to work. And that's where the moat or the defensibility for the business comes from. So the first thing is a refurbishment business needs to build trust. This is at the end of the day a second-hand product. The product, if people inherently believe that such a product will stop working after some time, it will fail on me when I need it the most. If I buy such a product, I should not regret why didn't I buy a new product instead. So that trust is the single most important thing, for which these guys solve it by doing 2 things. One is they provide warranties. Warranty is obviously a function of your refurbishment and your own belief in your refurbishment capability. Otherwise, your warranty cost will be very high. And the second thing that they do is they do something called a buyback, which is when you sell the product, you say that I will buy it back from you. You can do buybacks in 2 ways. One is when you sell it, you say I will buy it back after 2 or 3 years. Or you power the buybacks for somebody else. Let's say Vijay Sales is selling laptops. You provide a buyback there saying, okay, this is a 1 lakh laptop. I promise I will buy it back from you after 3 years for 30,000 rupees. That helps Vijay Sales in conversion and gives you a constant source of supply. But at the core, you need to build trust in this business. It generally takes time to build that trust. It's not easy on day one. And as you build it, it becomes a very, very strong moat, whether it's B2B, B2C, whatever. When you're selling a refurbished product, you need to build trust. And that is something I believe they have built painstakingly. The second thing that really matters for such a business is the refurbishment skills itself. These guys hold, I think, certified partnerships with HP, with Lenovo, with a bunch of these laptop brands. They have something with Microsoft. They do what they say is like a 21-step refurbishment, but way to think about it is they'll do everything from the simplest, which could be some cosmetic upgrade. Let's call it L1, or in technical terms, it's from L1 to L3. So L1 is this cosmetic stuff, these basic, screen repair, simple sort of things, all the way to L3 is typically a motherboard, chip, complex things that does require a little bit of technical or decent amount of technical skill. And there is a decent cost and profit margin angle at that end. A core part along with refurbishment is the ability to source spare parts, which is often the biggest challenge when it comes to products that are end of use or late in the life cycle. Spare part for a laptop or a phone today that released 3 years ago is not going to be easily available in the market. And for that, they have tie-ups. You basically have to have tie-ups with OEMs for this if you really want to be able to cater to every product. And that is something that they have. And the last thing, which is really important, is the supply itself, which is how do you source. So if you look at someone who sells new laptops, he's just going to go and tie up with a HP distributor, and there'll be a steady stream of new laptops for him to source. It's the simplest thing to do. But if you are a refurbisher, you are constantly trying to get new old laptops. Every week, every month, you have to keep getting new laptops. So cracking that supply channel is not very straightforward. And that is also something that they've done. So there are 2-3 ways. Like when I spoke about the buyback program, that gives them a steady stream of laptops. They power exchange program. So if you go to a Chroma, and I don't know if they actually work with Chroma, but as an example, you go to Chroma and buy a new laptop, you'll get a discount if you give them back your old laptop. And somebody like Electronics Bazaar would be the one that takes this and will sort of get this in bulk from, say, a bunch of these retail outlets. You also do things with corporates where you work as disposal partners for them, and you make sure that, let's say, TCS is disposing of 5,000, 10,000 laptops. These guys come and buy it in bulk. So this entire thing is something, it looks to me at least, that they have cracked across trust, across refurbishment, including spare parts, that constant source of supply. And you can see that in the various relationships they have to make sure that they can continuously scale this business. And they have, in my view, shown that over the last 3, 4, 5 years, whatever data that we have. And for me, if you can do these 3 things, this is a big, big moat. These are the hardest things to crack. When you do this, you build trust, which allows you to, there's a bit of a flywheel. As you source more supply, you get better at refurbishment. As you get better at refurbishment, you're able to provide better, more trustful experience because there's less failures. You're able to service whatever warranty issues are there. So it's a difficult thing. It's a step-by-step thing that you have to build, and it takes time to get there. So that's the core, I'd say, thesis behind a refurbishment business. I think there are now more successful refurbishment businesses in India. You have somebody like a Cashify. You have a Spinny, which has done very well in the used car space. There's somebody like a Cars24. So you have large refurbishment or second-hand businesses in the country that have scaled over the last few years. So I think second-hand is a segment that is getting is becoming more mainstream, getting larger. Somebody like this, they are, of course, not just reliant on India. I think only 25% of their business is in India, about 75% of their business is abroad. So they're also getting a cost advantage on top of, just the, on top of just it being secondhand, they're also getting a cost advantage by selling it internationally. So I think they've set themselves up beautifully. 2-3 points I'll mention from the RFP. One is, I think I said that 75% of their sales is from laptops. There is a core reason for this. Laptops are the highest discounted category amongst refurbished goods that you will see, which is if a new phone is 10,000 rupees, maybe the old phone will sell at 5,000, 6,000 rupees. If you have a new car, you probably get a 30-40% discount on it. If you have a new laptop versus an old laptop, you'll get an 80, 70, 75% discount on it. And that's a very unique thing about the laptop category, and has mostly to do with the fact that laptops are a bulk sell source of supply. You will go and source it from a TCS, or you'll go and source it from some corporate or some school or some education, this thing where you'll get 10,000 laptops in one shot. And for the person who's selling the laptop, it is a product he just wants to dispose. So you get it at dirt cheap rates. You're then able to also refurbish in bulk and then sell it at a fairly low cost while still making a decent margin. So that's a very unique thing about laptops. These guys are focused completely over there, giving that bulk sort of thing on both buy and sell, which helps keeps costs low and makes this a very, I'd say, high throughput kind of category. The numbers on the whole, they did about 1,400 crore last year with 5% PAT, 8% EBITDA. One interesting thing is so even though this company is at 2,700 crore market cap, so it's around 40x, 39x or something, with the IPO funds they're raising, 320 crore is going to be used just to clear out all their debt. If you take out the interest cost of the 320 crore, their PAT will effectively go from this 69, 70 crore to about 100 crore, roughly 100, 101, something like that, which effectively means this company is coming at 25, 26 times. It's not coming at 39. It's coming at 39 gross of debt, and they're going to pay off that entire debt. So it is actually coming at 26 times. If you throw in some growth for next year, that is for FY26, it's probably coming at 20, 22 times FY26, which for me, in a unique one-of-one kind of business with a lot of tailwinds, this whole recycling thing is a very strong tailwind. Reuse, recycle, going green. Many companies have this ESG, this, forgetting the full form of it, but these environment related goals also. So environment sustainability, yeah. So all of those are, in my view, structural tailwinds also. So for me, this is a very, very interesting company. I couldn't find any interviews. So that's one thing I want to wait and listen to, just hear the promoter out and just gather some confidence on the promoters themselves. But I am a big bull on refurbishment, just my own past, because of my own past. So I am definitely going to apply for this. This is something that I might actually keep as well in my portfolio for some time. I think the anchors are also quite interesting. I saw Bengal Finance in the name. Madhu Kela's fund was there. Nivesha was there. Goldman Sachs was there for just a 400 crore raise. So overall, this looked really interesting to me. I just need to get some comfort on the promoters because I have not been able to do any read or research on that and see if there's any on ground feedback. But otherwise, this is very, very interesting company to me, and I definitely will be applying. And I think it can do well even over the next. Sorry, one more interesting thing is I saw that this refurbished market for this segment, laptops, personal phones, is slated to grow at 32% year on year for the next 5 years. Again, it's one of those where the core market itself has very, very high growth projected. So a lot of things in my view going for it, coming at 25, 26 times net of the debt clearance, looks very, very attractively priced to me.
Got it. A question here, Rohit, top of my mind. I'm not sure if you know this, but like, are they a B2B player? Are they a B2C player? What is are they complete B2B right now? Like, they don't do any
Complete.
B2C.
It's like some 3-4% B2C, and they've mentioned also that they had tried B2C. But B2C is a very, very different game. And I think this business, the biggest successes, with probably the one exception of Spinny, which also I would say has to be proven, because their economics are still not yet proven, though they have hit scale. B2C is a very, very difficult game. Generally, refurbishment and second-hand businesses have scaled in the B2B model. And I say this as someone who tried the B2C model in this space. And I know how challenging it is from an acquisition cost to get to the right consumer at the right cost. So even an Amazon and a Flipkart, they have shut down their refurbished businesses because it was so complex and so time consuming, and it is a lot easier to just do B2B where you work with either large corporates or you work with large dealers who will send the products out to tier 2, tier 3 markets where there is, say, demand for this. So they are purely B2B. I think B2B is the way to work here, both on the sourcing side and on the demand side. And I think that they have also, what I could sense from the RHP, because I did look this particular bit up, was that they said they tried B2C, it didn't work for them, and they said we'll just focus on B2B.
Got it. And then like I know Amazon shut up, as you said, right? And that had a major impact on news data, if I'm not wrong, right? So like इसके जो end customers है, do they then sell it to B2C, or like are they colleges, institutes, or things like that who actually end up using these refurbished
It's both.
laptops? Because somehow
Yeah.
I still don't get confidence on a refurbished product. And again, like, I'm not one of those who thinks that, because I feel these electronics have reached a fast moving consumer product sort of it's more of a FMCG where you just shuffle and move back and you never look at your old products. Like, I would have at least 2, 3 phones at my home who have just like, we have never refurbished, for the lack of a better word. We don't even understand if this segment exists. So
that is the myth that needs to be broken a little. So if you look at most countries, India also, and if you look at the mix of new products and second-hand products sold, you'll be surprised to know that in many categories, the second-hand product sells, like if you look at the volume of products sold, it may not necessarily be by value, but by volume of products sold, you will, in some categories, have as many new products sold as second-hand products. So in the laptop category, for example, if I'm not mistaken, every new laptop or every laptop that is sold, or every 10 laptops sold, 6 are new and 4 are old. Now you might feel icky about it or that lack of trust, and so you will fall in that 6 who buy new, but there are 4 others who are buying an old or refurbished laptop because of the price value proposition, because that's what they can afford. Someone is giving them warranty, giving them assurance that, okay, I'm getting for 30,000, I'm getting a laptop that is otherwise worth 90,000 or a lakh, and I'm getting an experience almost as good as new. If you look at the car segment, globally, for every one new car that is sold, 2 used cars are sold. Now, again, something like this might look very hard to believe if you are someone who only thinks about new, but that is a fact. The numbers are not opinions; they are facts. So there is a large market of people who buy second-hand refurbished, for whom the functionality outweighs the the fact that it is not new, and it is a thriving market just globally. Like every country, there is a large second-hand. It varies by category, but there is a large second-hand market in every country for just about every product category. So it may not directly sync with our consumer experiences, but it is a reality.
Got it. Understood. And I was looking at the anchor book. The anchor book was very interesting for this small size of issue. There were so many names, quite a few of decent names, although some of them tend to also come in SMEs when there is a hype in SMEs. But yeah, the anchor book was decent, for the lack of a better word.
Yeah, it was decent anchor book. Like
But,
interesting,
but
good names. Yeah,
any peer, I don't think they have given any peer. There won't be any listed peer, right? Will
there
New
isn't. Yeah,
Jessa be a peer, or like New Jessa would be very low
New
P,
Jersey.
right? Because
Yeah, it
that
is.
business
It is.
shut down effectively.
Yeah, but a small SME in the segment is not reflective of what price this will trade at. I think this will set the bar for a refurbished business, and it's hard to say exactly what it should trade at. But I think 20-25 times for a business where I think there is tailwinds, there is a decent moat, there is a lot of different things that you need to do well. It is not like trading electronics, refurbishment. Everything is different, from the supply chain to the refurbishment to the demand side. Like it is complex. Like you have a bunch of electronics distribution businesses that will come and trade at 10p, 12p, Rashi Peripherals and Reddington and all these guys, right, which are just pure distributors operating at 2% EBITDA. Whereas this guy operates at a 8-9% EBITDA, if I'm not mistaken, 8-9% EBITDA. So there's very big difference in what the two companies do, or these segments, and this will definitely get a premium. I can see this trading at 25 times, 30 times comfortably.
This one is coming in at 35, right? If I'm not wrong.
It's coming at 39. It's coming at 25 net of debt. Like they're coming in with. Yeah, they 320 crores.
Okay.
Yeah.
So you feel most of the gains will only be from EPS then, right? Like, or else there may be a sector PE re-rating as well, because there's no peer, so nobody knows where they.
Exactly, there is no peer, and
So
in Mainboard, no
it
peer.
can have that Premier Energy sort of a graph, right? Where it's very confused. Where do I need to trade?
Yeah, market will be very confused what to price it at. But I think it is a unique business, so it will get, like, it's coming at, in my view, 25 times trading. If you take out the debt, it's coming at 25 times. I think 25 times is very cheap for a very, very unique business. So I feel it will do well. Like it can give a good, decent pop.
Got it. Yeah, that is what our review was of GNG Electronics. With that, maybe in the interest of time, let me move forward and talk about one last company for the day. The last company that we will be discussing is Indiqube. So just setting up Indiqube, and we'll kind of cover it rather quickly. Incorporated in 2015, company provides managed, sustainable, and tech-driven workspace solutions, aiming to transform the traditional office experience for modern businesses. The company manages a portfolio of 115 centers across 15 cities. Total seating capacity है जो इनकी वो 186K 1,86,000 seats हैं इनके पास as of March 31st. And that includes the LOI as well, जो इनने बोल रखा है कि बनेगी. अभी currently I think 1.4 है. In terms of the IPO size is 700 crores, 700 crore का IPO है, out of which 650 crores is a fresh issue, 50 crores का OFS है, 650 crores is going into the company at a market cap of 5,000 crores. 5,000 crores per company IPO ला रही है, जिसमें से 700 crores का raise है, so around 14% dilute कर रही है. In terms of market, FY25 financials की बात करूं, तो रेवेन्यू 1103 करोड़ है, 1103 करोड़ रेवेन्यू है, पैट -140 है, लॉसेस में कंपनी एटलीस्ट. In terms of how the accounting is, very depreciation heavy business, as all co-working businesses are, so it shows us loss. But we look at what cash PAT is, cash EBIT is for the business. In terms of the LM is ICICI and JM Financial. So company की बात करूं तो again, like last week we discussed SmartWorks. This again is in the same segment, which is your co-working and managed aggregation. So I learned today that the two segments are different. Co-working is basically, think of like co-working as, for the lack of a better word, when you go to a restaurant bana hua hai, and then you are going and like taking dinner, eating dinner there, right? So demand is being fulfilled after the restaurant is built. Versus a managed aggregation model. Managed aggregation model is they are first figuring out कि भाई किस किस को कौन सा office चाहिए. उसके बाद once they have enough demand, that's when they go ahead and build it. So it's more of like रिजर्व करके रखा है टेबल तुमने, उसके बाद ही वहां टेबल बन रहा है. सो इट tends to have a slightly higher premium is what I was told. Office is more in co-working. These guys, SmartWorks and Indiqube is more in managed aggregation. But for me, at least, I don't understand that part. For me, everything is the same. End of the day, it is co-working. Like if there is enough demand, people will come. If the office is there and there is demand, people will come. So I still think that they are just creative usage of language in terms of like how you want to call the language as. But yeah, in terms of the very high level, the company is a co-working or a managed aggregation company with a leadership position in Bangalore. Bangalore enjoys 30% of all flexible space stock. जितना भी इंडिया में co-working का trend है, Bangalore is the leader because of ITES, BFSI being big in Bangalore. So this guy is the leader in Bangalore. Bangalore में it's a very popular name, Indiqube, and does very well. So it holds a leadership position there and is present across 15 cities. एंड इसके क्लाइंट्स जैसे आप देखोगे तो मोस्टली बैंगलोर बेस्ड जो भी क्लाइंट्स हैं आप सोच लोगे, जीरोधा हो गया, मिंत्रा हो गया, अपग्रेड हो गया, नो ब्रोकर हो गया, नो रेड बस हो गया, ऑल ऑफ देम हैव देयर ऑफिसेज इनटू दीज IndiQube मैनेज्ड स्पेसेस. So that's the high level about the company. Again, sector की बात करूं तो I am very positive on the space because the end of the day, what the business needs to do is its core business. It doesn't need to spend time on where's the security coming from, where is there enough water in the water cooler, or is there enough maintenance being done. So all of that gets outsourced, very WeWork sort of a model. WeWork will also come, by the way, with an IPO soon. So it seems that there's a flurry of these IPOs which is coming in the co-working space, which means that there's just too many players, and there will be some consolidation. Some will unfortunately die off, some will become bigger. That is how the industry will operate per se. But in terms of like coming back to IndiQube, as I said, Bangalore they have 115 centers right now. Total 8.4 million square feet, out of which Bangalore itself has 65 centers with like 5.4 million square feet. Chennai second pay with 17 centers with 1.2. So every segment, every area has its own co-working which has become bigger. Very similar to how e-caps were doing, right? Like Blue Smart, which unfortunately closed down, which I really loved the service of. But yeah, Blue Smart was big in Delhi. Then there was another cab hailing platform in Hyderabad, another in Bombay. So everyone, it was in nooks and corner sites. It seems like co-working is also going through a similar structure where, say, SmartWorks is very popular in North India. IndiQube is very popular in the southern India towards the Bangalore side of the world. So that's the high level, but yeah, they are very big in Bangalore, and Bangalore essentially also leads in all GCC setups. So जैसा मैंने last time भी बताया था, most of the demands comes from GCCs, Global Capability Centers, जो बाहर की कंपनीज हैं वो GCC बनाती हैं अपनी इंडिया में, सेंटर ऑफ एक्सेलेंस भी बोलते हैं उसको. So once they come in, they don't want to go through the hassle of finding a space, managing the space by themselves. Think of a very simple example, right? When you are living in a flat versus living in a builder floor, for the lack of a better word. Builder floor जो भी दिल्ली गुड़गांव के लोग हैं वो समझेंगे, right? So builder floor में तुम्हें सेफ्टी खुद से करनी है, पावर जनरेटर खुद से लगाना है, versus flat where everything is just centralized committees taking care of everything. You're just paying the cost, right? It's a very similar structure in co-working as well. So I'm very positive on the space generally, on the sector. I still feel that office is a better peer. Like if I was saying that office is a better peer compared to SmartWorks, it is a much better peer compared to Indiqube, because Indiqube is even expensive. Indiqube coming in at like insane valuations when I look at it. But yeah, as I said, it's a 11-year-old company, co-working company, totally having 1.54 lakh seats currently operational. 1.4 lakh seats which are currently operational. इसका अगर आप देखोगे तो 85% occupancy है. Uh, Two things which are risk. One is that their steady state occupancy has been declining. Like वो FY23 में 93% थी steady state occupancy, वो FY24 में 90 आ गई, FY25 में 86 आ गई. So steady state occupancy क्या है? Basically any center which is at least 12 months old. So which means that अब ये उनने live कर दिया, and usually that shouldn't decline, right? If that is declining, that means that your core centers, which now will start making profits, they are not able to sell as much seats, or clients are leaving and then you are not able to fill them back. So that's a slight risk on the business, that the steady state occupancy is declining. And the second risk is, again, as I said, which is a risk as well as a boom on how you want to take it. Business is very heavily concentrated in Bangalore. Like around 66% of all business comes from Bangalore, which just is a huge concentration risk. Like if something happens, then although if you think of it, even 44% of all GCCs are in Bangalore. So they have found their niche and are growing very heavily there. So because of which it just tends to like be heavily concentrated in Bangalore. अगर मैं FY25 के financials की बात करूं, so they did a top line of 1100 crores जैसा मैंने बताया, and around 27% की growth थी. Revenue to rent का जो ratio था, that went up, that is at 2.4x compared to SmartWorks, which is at 2x. So they are just able to generate more revenue compared to the rent they are paying. Because at the end of the day, there's a very straightforward business, right? तुम lease पे लेते हो एक space for a long period of time, 10 years, 15 years, and then उसके बाद उसको तुम छोटे-छोटे parts में आगे बेचते हो, right? So the more revenue you can generate compared to your rent, the better it is, right? So it is at 2.4x versus a SmartWorks, which is at 2x. So which is good, but other than that, the margins seem to be declining. Like margins in itself have been going down. FY24 में कंपनी का जो cash EBIT है, वो FY25 में 114 crores है, which shows that the margin is only 10.5% approx. FY24 में वो 13% था. So margin has been on a downward trend, at least in terms of cash EBIT. So which, like if you look at the office tends to enjoy a higher margin. Office's cash EBIT margin is somewhere around 13%. This guy's at 10.5. So and the seats also, office has like 1.3, this has 1.4, SmartWorks has 1.8. But like he who has a higher margin and a lower occupancy rate would tend to do well, because जैसे जैसे ज्यादा सीट बढ़ेंगी तो margin और बढ़ेगा, right? This guy is already at like 90% 85% occupancy versus office, which is at 73%. So that's the broad high level difference. As I said, this guy's at 85% occupancy, SmartWorks is at 83, office is at 73. So office is operating at the lowest margin, maybe because of that co-working angle, where they are finding people after they have built the offices, because of which the margins can be somewhat low. I don't agree with it. But in terms of like top line की बात करूं तो इनकी top line, although इनकी सीट ज्यादा है, इनकी 1400 सीट्स हैं, और इनकी 1.4 लाख सीट्स हैं इनके पास. ऑक्यूपेंसी भी सबसे ज्यादा है, लाइक 85% ऑक्यूपेंसी पे, येट इनकी जो टॉप लाइन है, इनकी 1100 करोड़ का ही रेवेन्यू है. ऑफिस का 1200 है, स्मार्टवर्क्स का 1300 है. सो बिकॉज ऑफ दैट ऑल्सो I feel that they're not able to generate as much profit, as much top line as much the other two players. Realization is also at 6,800 rupees per seat versus a SmartWorks, which is at 6,600. Office की सबसे ज़्यादा, office is somewhere around 8,500 rupees average realization. So जैसा मैंने बताया कि जो cash EBITDA margin है, that is also lower. It's at 10.5 versus office, which is at 13%. So you'll think that this business is like slightly on the lower end because your margins are lower, your revenue is lower, even after having more seats. So you would expect it to be slightly priced lower where you are leaving something on the table, but this guy is priced at a EV enterprise value of 5,200 crores, uh, which compared to Office is at 4,500 crores, SmartWorks is at 5,100. So they are very tightly linked. Like इसी range में आ रहे हैं, everyone's somewhere around 600 to 650 sort of a uh, million sort of a number where everyone's trading at. But again, I don't feel for like I would structurally want to pick whatever has the highest EBITDA margin, EBIT margin, cash EBIT margin. This guy as well as SmartWorks have a lower EBIT margin. That is where I'm like my point is like had they left something on the table, it would have made more sense. But at least if I look at it from a high level, it just seems everything seems priced in. So because of which I don't get that much comfort. Like as I said, अभी मैं just इसका cash EBITDA margin देख रहा हूँ. So it's Office का 13, this is 10.8. Revenue from operations Office is 1,207. This one is 1060. Then one more thing which is a negative for Office is Office has 230 centers. So their centers are smaller. This guy has 105 centers. So it just tends to like you would want to have more operational leverage as and when you have larger centers. So which is good for this. But other than that, there seems to be like a lot of things which are like it is priced to perfection. I feel where it is like coming in 10% expensive enterprise value wise compared to Office. So I don't know how much to read into this. So it might be a long term story. I'll tell you what works for this. The one thing which works for this is that they are a undisputed leader in Bangalore. Bangalore, they enjoy a lot of co-working spaces, market share, and Bangalore would probably continue to lead in ITS sort of services and would be a leader in this space. So because of which it might be getting a premium. But if the company is already coming at a premium, I don't know how much they have left on table for new investors at this moment of time. So I would probably apply for short terms or I'll skip. I'll decide on that day. But again, if someone wants to apply, long term is the view. Listing gains शायद हो जाए because it is still having some premium and then the anchor list also looked decent. There were quite a few names. There was White Oak, if I'm remembering correct. Motilal was there. So it was a very mutual fund heavy anchor book, which is good because then there were so many names that it seemed that there is something which I was at least not able to gauge at top of my head, but it showed that there was enough demand, maybe because of the Bangalore angle and and people feel that this company will tend to grow the fastest because like if you think about it, they have also raised the least, like they have raised around 320 CR till date compared to SmartWorks, which has raised 500 CR, and Office, which has reached 400 CR. So they've just deployed their capital well. So, and they have deployed their capital well in areas where there is enough demand. It is proven. So maybe the market will kind of look at it saying that, okay, they deserve a premium. But for a like-to-like business to be able to come at a higher EV is something which I am unable to, at least at this moment of time, understand fully, because of which I will either look at this as a short-term story or not look at it as of now. Is what my view is. We'll still decide on last day. I still feel this area has to go through consolidation. There are so many players which are coming in. I know DevX is coming next in the next 1 month as well, which is the fourth player, which is big around Pune. Then your VWorks will end up coming as well. So there are so many players. EFCI is already listed. That the space will become tighter because more and more companies tend to come in. They tend to fight on margins, right? Because whenever you're signing a new customer, end of the day, space, like it doesn't matter, right? Whether like after a point of time, it doesn't matter whether I sign up with VWorks or Indiqube or a SmartWorks or Office, right? Like what matters to me is their location, etc., and everything. So I still feel that it is a commoditized business, so margins will get hit. So for now, like the sector has tailwinds, but there are just too many players. So I'm slightly confused on how to value this one. I'll look at it on last day in order to apply for either short terms or I'll completely skip this issue. That is what my review was on Indiqube. It was slightly short and slightly hurried because of the shortage of time. We have been on this for 1.5 hours. But Rohit, Sachin, you guys have anything to add on Indicube?
No, man, I'm
Just
in
that
studied, yeah. Sachin, over to
too
you.
many players, too many players in the segment.
Yep. Sector's going through that period right now. Everyone's getting listed. But yeah, that is what our review was of Indicube. So with that, we have kind of covered the 6 companies. All of them interesting. We've covered all of them. And we will come back next week. We'll talk about a few good SMEs as well as Mainboard raises. So definitely join back next week as well. We'll see when we want to do it. Ideally, we would want to wrap up on Sunday because we have time on Sunday. Mid of the week becomes tight. But yeah, thank you so much everyone for joining. Have a great day ahead. Thank you. Bye.
Thanks, everyone.
Thank you, everyone. Thank you.